All right, so we are going to look at, in this session, ethical and professional consideration, which is basically how your exam starts. So we are taking a look at question 1, ethical and professional consideration. All right, now, these are not the same things. When a question asks you ethical, so he will give you a case, all right, then he will ask you to identify or discuss the ethical and professional consideration inside the case. Now, these are your answer clues. Now, when the question asks you for ethical considerations, there are, I used to teach it as 4 things, but in the new syllabus, I'm going to add 1. I used to teach the ethical things 4, then professional things 4. Now, with the new syllabus, they've geared one of the things more to the ethical side, and they've given it 10 marks, so we'll be doing that. So in the ethical consideration, we'll be talking about SSAFI. I'll explain the SSAFI to you, all right? The first one is self-interest. Second one's self-review. A, advocacy. F, familiarity. Then I, intimidation. We call it the SSAFI. Some people add M to it, calling them management impact, but I keep the 5, the SSAFI. So you'll be looking at the SSAFI, you'll be discussing the SSAFI, and you'll be spotting those things in the question. Number 2 is confidentiality. Number 3 is what I call I of C, and number 4 will be C of I. I of C is integrity of the client. And C of I is conflict of interest. So you can remember them, can't you? SSAFI, confidentiality, I of C, C of I. All right. Yeah, you can remember them. Now, the 5th one that is kind of a neutral that has been isolated out for 10 marks in your exam is corporate governance. And we will look at it in detail. Corporate governance. And that is more of the new syllabus. So that is that. Then on the professional end, professional consideration, we are going to look at 3 things. Number 1 is money laundering. So that will be in our next session. Money laundering. Then number 2, we will be talking about auditors' liabilities and professional skepticism. Auditors' liability. And professional skepticism. All right. The 3rd one, call it practice management. Then under practice management, we are going to learn how to obtain a client. How do you obtain a client for audit? How to obtain a client. So the ladies, when we get there, I'll ask you how you had your husband or how you had your boyfriend. How did you get that client? Then, so even the guys too, I'll ask you, but it is more of the ladies than the guy. All right, so the second phase of practice management, we will learn how to now maintain the client. So by the time I finish, If you have already obtained, I'll teach you how to maintain. Okay, so how to maintain a client. All right. In how to maintain a client, we will discuss how to maintain a client at firm level, where we will learn ISQC, International Standard of Quality Control, and on the job. So if they are at site working, how do you maintain it? All right, so that is that. How do you maintain it? So these are what we are going to do. All right, these are what we are going to do. Now, for now, we are going to discuss the ethical ones. So the ethical ones, my objective is to finish this one, the ethical is for today. All right, so that is my objective. You saw your time, your lecture schedule. Those are what we have. Now, so we are going to go straight in there and discuss the SSAFI. It's a little lengthy. As for the corporate governance, we will get a special time for the corporate governance. All right. So now we go in straight to the ethical consideration. So we will discuss it, but you see, you are not going to be asked to write what is SSAFI, what is all these things. What you will be asked rather is a case. You'll be given a case. Yes, you'll be given a case, and then you'll be asked to discuss it. All right. So that is it. Continue. So with the ethical consideration, we first look at the SSAFI. Now, I spoke about integrity, objectivity, professional competence and due care, and professional behavior. These are the IFA code of ethics. Integrity, we all know what it means. It means to be honest, all right, and to in all your professional dealings, you have to be honest. Objectivity is to not to be biased, not to be unduly influenced. All right, you have to just be straightforward. Professional competence simply means you have to have knowledge and maintain the knowledge. All right. Then due care means diligence. Do your work very well. Diligence, excellence. All right. Confidentiality is not using information you have on an audit client with a third party for your personal gains. Professional behavior simply says that don't behave in any way that will bring disrepute to the profession. All right, so that is that. Now, these are the SSAFI. You see, S, self-interest. Auditor could benefit from financial interest in clients. We are going to look at them, the issues there. Then we have self-review. Auditor in the position of reviewing work they have done or they have been responsible for. Then we have the A, which is advocacy, promoting, auditors promote an audit client's position or opinion. So that is advocacy. Then we have familiarity, becoming too friendly with your client because you have worked with him for a long time. We will look at that. The intimidation is the auditor being subject to intimidation. I mean, kind of placing a force on the auditor to do something. All right, so we are going to pick up the issue one by one, and we are going to discuss it. So let's start with the self-review. We've seen that it's when you have a financial interest in the client, all right? And we are going to pick the issues out. These are the examples, and these are the things that makes your exam. These are the things they use to phrase your exam. Financial interest, closed business, employment, all right, and all those things. These are the things that goes into your business, your exam, sorry. Now, let's pick the first one, financial interest. So, you owning a share inside the client business. So let's list them one by one and discuss them. All right, so we are dealing with the first one, which is self-interest. And please, this place is a very discussive bit, so ask questions. Let's talk about it so that you can remember them. All right. So now we have the financial interest, you owning a share or having a beneficial interest in the form of an investment in a client business. So when you read the question, find out if these scenarios are in the question. Then you pick it up. I'll show you how you write your exam answer. All right, that is that. So the standard says that the ethical code is saying that there are some people who are not allowed to have a direct interest in a client's business. These are the people. They are not allowed to have a direct interest in a client business. And these are the people. You see them? The assurance firm, a member of an assurance team, an immediate family member of the assurance team, other partners and their families. All right. So these people are not allowed to have a direct interest in the client business. So that is what the standard is saying. If these people hold a financial interest, there is no safeguard that will be sufficient. There is no safeguard. So it means that if they have it, then they should not even go in there and attempt doing the job. That's the meaning. There wouldn't be any safeguard. So just don't take the job. That is it. All right. But what if their interest is indirect? It is not direct. Then that part, we have to be very careful in our discussion. Because when it happens like that, then it means that in that case, maybe we can do something about it, but we still have to be careful in safeguard application. Because if they have an indirect, so for example, let me give you an example. So this is the audit partner. He saves money with Enterprise Limited. And his money in Enterprise Limited, Enterprise is investing in company A. Now, the auditor is the one coming to audit company A. Have you seen the scenario? So let's discuss it. Is it a threat? Is it a threat?
Yes. Yes, it is.
Explain.
Because the auditor have financial interest in the company due to the enterprise investment in that company. Of any negative any negative opinion about the company will affect his investment in enterprise.
That is true. But you see, that is very good observation, a very good observation you've done. I like that. But the standard is saying that for it to be a threat, it depends on how much he will be having inside this company. Okay, if his investment is just 1 Ghana cedi in this, and these people invest here, is it that of a threat?
No, sir.
Exactly. So the issue becomes issue of materiality. All right. But you see, whether material or non-material, you still have to talk about disposing of the interest or you being removed from the audit team. All right. So that is what you have here. For members of the audit team, if the interest is not direct, example, holding an employee pensions or not material, so the client cannot exercise significant influence, then safeguards applies as follows. All right. So since it is immaterial, or if it is material crowd, you don't go there at all. Because we talked about this. All right. So basically that is that. So if it is indirect, and the indirect, when it is in like manner, in that indirect manner, you should dispose of, or you should be removed from the team that is going to do the audit work. Now, there is a particular scenario that they've been examining. Let's say this is the audit firm, not the partner now, it is the firm. All right. And I just assumed work in the firm. So I'm an officer. All right. I'm an officer. Now, I am the one that is having this kind of indirect. What will you say about that? Is it a threat? Is he a threat? I'm just an officer. What will you say about that? Think about it.
I would say it's not a threat
Why? Oh, explain. Just share your opinion.
because you just being an officer, it will be difficult for you to influence the audit opinion
Yes, it's true.
at the
It's
end
true
of the
because your work passes through
audit.
supervision. It passes through supervision. So you are just an officer. It won't have that significant impact. So that is that, because your work will go through a supervisor before it gets to the audit partner. So that is that. So you have to read the scenario very well. Okay. So that is that. Is that okay? So sometimes you don't just go straight and you see because the situation is there. That is it. All right. So that is that. Let's talk about business relationship. So a business relationship is a situation whereby the auditor and the client are in a business. They are in business. The standard says that the auditor should not participate in any form of business with the client. And if such exists, they should be removed from the team. If even a member has such, they should be removed. You cannot be having a business relationship with it. All these things you are saying, these are your exams, and that is it. If you have my book, for example, after studying all these things, you have 30 questions for practice. 30. After you've gone through it, you can't say that you won't be able to do it. No, you will always be able to do it.
I have a
All right.
question.
Yes, ask your question.
Okay. So, with the issue of the self-interest, let's say the the member of the team who has a significant interest in the institution that is being audited is removed. Can't another member in the team who is friends with the person who was removed make any influence in the audit opinion in the interest of the friend?
Please come again. Sorry, come again. Sorry, come again on the question.
Okay. My question is, when okay, when the person is if the person has a friend
Uh-huh.
who is still part of the team, can the friend influence the audit opinion in interest of his friend?
Yeah, that one they can't control. But the person who gives the opinion is the audit partner.
Okay.
Yeah. So that is it. The person who gives the opinion is the audit partner. So the friend can maneuver one or two things to influence the audit. But you see, that one is, you can't predict that. You can't control that, right?
Yes.
Yeah, you can't control that. Well, everybody has friends, so it's interesting. That's a nice question. Everybody has a friend. So if you take me off, my friend will do the job. Is that not it? You can't actually control it.
Exactly.
That's on the extreme part. All right. So that is that. So we are saying that you can't have a business relation. And care must also be taken. So for example, if the auditing firm, let's say company audit firm A is the one that audits Kingdom Books and Stationaries, right? And Kingdom Books and Stationaries is the one that provides the audit firm stationaries. What do you think will happen? What do you think will happen? Mm-hmm. Yes, guys.
I think this one does not constitute because this is a normal trading activity that exists between the audit firm and kingdom.
It's a normal what? Trading activity.
Trading activity, yeah.
It's a normal trading activity, but hand go, hand come up. You do me, I do you. The person give you discount. Don't you think it, oh, so you are the one doing my this thing? All right, me too.
Okay.
Yeah, so this is the thing. When they are KBS is selling to the audit firm, it must be at arm's length. All right. Any business transaction such as that should be at an arm's length. Is that okay? Yes, Ismail, you have a question? Do you have a question? All right, so that is that. So that is the business relations aspect. All right, so that is that. All right, so basically that is that. Now, let's talk about potential employment. You see, those of you who don't know, companies like poaching audit staff. When the audit staff come to their office, they like poaching them. And so what happens is this. They will tell you that, how much is your audit firm paying you? We can pay you so and so amount if you agree to come and work with us. We see that you work well. They are just trying to poach you. All right. So now what happens is this. If it happens that the entity is trying to poach you, you must notify your firm about that potential employment move. If they will still want to take you, they won't have a problem with that if you notify it. But immediately you are being notified, your firm must remove you from their team, all right, and cause an independent person to review the work you did. Yes. So that is that. Sometimes once the person is removed from the team, that ends the story of their potential employment. They were just using it to deceive you to bring about your independence. So that is it for potential employment. Notify your firm, be removed from the team, then let an independent reviewer review the work that you did. All right, so basically that is that. Then recruitment services. This one happens a lot, that audit firms has been recruiting for entities. Now, an assurance provider, that is an audit firm, must not make management decision for a client. And that is where the management impact people talk about is coming from. Now, what does it mean? What it means is that you are not supposed to recruit somebody for an entity for which that somebody is going to be making management decisions. So you can employ a gate man for them, no problem. You can employ a normal secretary before them, no problem. But you can't employ somebody to the firm for which that person will be having an influence in the decision-making process. All right, so that is that. And even for public interest entities, that's listed entities, the audit firm must not provide these kind of services at all. They must not search for candidates for the position. They must not even check candidate references. They must not be references to candidates. All right. But for a private company, even with that, we are saying that even if you are doing it for them, you must not do it in a situation where those people will take management positions. All right. So that is that. If you have questions on the things, please kindly ask. It's very important to me that you ask questions because when we start the practice, I would expect more from you. All right, so that is that. Now,
Question.
yes, thank you.
When it comes to the part where when the client offers you a job, do you have to be interested in it before you report, or even if you're not interested in it, you will have to still
Even
report?
if you are not interested in it, you should tell your people. All right, you have to tell it because it is
Thank you.
employed. All right, so the fees. Let's talk about fees, audit fees. Let's talk about let's talk about lowballing, contingency fee, and the last one will be overdue fees. Overdue fees. All right. Overdue fees. Now, the fees that you charge a client must not be more than 15% of the audit firm's revenue for 2 consecutive years. Consecutive years. So that is the caveat. Why that? If one client audit fee form more than 15% of you, the audit firm, your revenue, that client, you will worship him. You won't be independent towards him. What is lowballing? Lowballing is simply charging a significantly lower fee. They charge so low a fee so that they will use it to get the client in the hope that in future they will be increasing it much more. That is lowballing. Yeah. So even these ICA classes, people do lowballing with it. They start charging small. Then when the students start passing, they are now increasing it small. All right. And lowballing is abolished. Contingency fee is say, do the audit for me. If the thing is true and fair, I will pay you this. If it is not, then I will pay you this. So it is based on a condition. Overdue fee simply means that the person who owe you has so much that he owes. All right. So he has not paid some outstanding. Now the ethical concept says that unless the person pays the outstanding fee or agrees with you to pay the outstanding fee with payment terms, you should not continue to do the audit. Contingency fee is also abolished. When this one happens, you need to disclose. Not just disclosing it, you need to cause an independent person to come and audit the work that you have done. All right. So these are the issues surrounding fees. These are the issues surrounding fees. I hope you will remember them. I hope you will remember them. Which one do you think will be a little difficult to remember? So this one, disclose. You see, this one is 15%. The client that you are going to audit, the money that you, the audit firm, you charge the client should not be more than 15% of the audit firm, your revenue. It is not the client's revenue, you, the audit firm, your revenue. Because if one client alone revenue forms more than 15% of your revenue, you won't be independent. You will try to do anything to have that client in your books. That is it. And so therefore disclose, cause an independent auditor to review the work. All right, so that is that. As for lowballing, it's abolished. Overdue fee is not accepted, or the person has to pay. All right, or you have to agree payment terms before you can go on to do the work. Contingency fee is a conditional fee, and it is also abolished. Now let's talk about gift and hospitality. Unless the gift is trivial or inconsequential, the audit firm should not accept it. Yes, and even if you reject it, document it in your audit file. When we say something is trivial or inconsequential, it means that that thing is not material. So like when auditors go to offices, the offices buy them food. All right, that thing is trivial, it's inconsequential, but it's relative. Obisubeka say it is not. Trivial means that the thing is small, inconsequential. All right, so that is that. You heard of the judge who was being when they were appointing the judge, they asked me, so if somebody brings you a goat, will you take it? He said yes. In Tamale and in Ghana, goat is a form of greetings. So the person is just greeting you. It is trivial. It is not consequential. But this thing can be relative. All right. So that is that. So that is it. Then we have loans and guarantee. As an audit firm, you should never take a loan from your audit client. No. unless that client is a banking firm or a financial institution. Even with that, when you are taking the loan, the rate must be at a commercial interest, all right? It must be at a commercial interest rate. Other than that, no way. Even if it is at a commercial interest rate, you still have to disclose, all right? So disclose those ones that are made under a commercial interest rate, all right? So please take note of that. Serving as a director on the audit team, no way, because we said that you should not be in the position where you make management decisions, unless being on the board is just a secretary job, all right? If it is just a secretary job, then that is fine, all right? So unless it is just a company secretary on the board, all right? So that is that. So that ends self-review. Any question on that? Self-interest. The rest is far easy. We will finish very soon. Now, let's talk about self-review. Self-review is kind of being in the position to review your own work, all right, your own work. So we have these areas to talk about. We have recent service, general other services. But most importantly, these are the places. We are talking about preparing financial statements for your client, preparing the financial statement. You are the one preparing the financial statement. If you prepare it, who will audit it? How can you prepare it and audit it yourself? So here in self-review, be careful of the question. Read it well. Is it a public company or a listed company, or is a private company or an unlisted company? Please, when we say public, we are not talking about public sector government. We are talking about listed company. All right. Now, for a financial statement preparation, in a public company, no auditor is allowed to prepare the financial statement and at the same time audit it. No, it is not allowed. But in a private company, a department of the audit firm can prepare, and another department of the audit firm can audit. Please, I hope you've gotten the difference.
Yes, sir.
All right, so that is that. Audit firms have departments, so that is how it can be. That is how it can be. All right. So that is that. Okay, so basically that is that. Now, let's talk about, so you see it. So when it comes to self-review, just make sure you know the company that you are talking about. Valuation. You've heard of revaluation before. You've heard of revaluation before. If you are the one who went to do the revaluation and you are the same person going to do the audit on that particular asset, it's self-review. That one too is the same. Is the same. Now, what happens is this. In a public company, valuation, you cannot do it. But in a private company, a department can do, another department can go and do the audit. So that is that. And please be careful when you are reading the exam question. Spot out whether the company is a listed company or not. I will show you all these things in practice in our next session, how you pick it up and answer it. It is in the book as well. I've highlighted those things. Now, so that is that. So valuation too is just like preparing the financial statement. For a public company, no, it is not allowed, but it can be done in a private company. So far as separate departments are the ones handling it. Then taxation services is where the issue ends. You know, in tax services, we have 4. One is return filing. Return filing. Return filing, there is no problem. So far as the management of the entity that you are doing the return for is, is going to take responsibility that they are the ones who filed it. So that one, there is no problem. You can actually do it because tax return does not generally threaten any independence. All right, so that is that. That is that. But when it comes to tax calculation, you see, tax calculation, when you finish calculating it, it puts a figure inside your financial statement, the tax expense. It does. And therefore, it is therefore dangerous. A public company is a no-no. You cannot compute tax for a listed company. But for a private company, like I said, I mean, a separate teams can be used, all right? So a separate teams can do the computation and another team can go and do the audit. I have had that experience with Deloitte most times, all right? Then we talk about tax planning. Tax planning too is actually accepted so long as it is supported by precedents. So if you have precedents, then it means that it is acceptable. What we mean by this is that if it has happened before, or if the tax planning that you are going to do is not going to put a significant amount in the presentation of the financial statement. If it is, then it means that it is going to affect the financial statement audit. So check the question well. Is the tax advice going to put a figure in the financial statement that is material? If it is so, then no. But if not, it's an advice you are giving. The person can actually take the advice or decide not to take the advice. Then assisting the client in a, what do we call it? A dispute. Assisting a client in a dispute is actually an advocacy. If you assist your client in a dispute, you are supporting the client from trying to, the key name for advocacy is called intermediate. So that is that. So you are trying to work on behalf of the person. It is not acceptable in both ways, whether private or public. And so therefore, you have to turn that aspect down, all right? So you have to turn it down. So there is actually not a safeguard for that than for you to turn it down. So you should not provide those kind of services, all right? You should not provide those kind of services. So that is that. So you have to go, and sometimes they will tell you that if you say you won't provide that kind of services, can you recommend somebody for us? Recommending somebody for a client is as good as you doing it. Recruitment for the client. So be careful. So you don't. You just don't. All right. So that is that. There are so many audit firms. You can say it in passing, but I mean, be careful about it. All right. Then internal audit services. Some audit firms do internal audit for some clients. Please, if the thing is a public company, no. If it is a private company, then no problem. So you see, it says that if the client is a public interest entity, then internal audit service must not be provided if they relate to a significant part of the internal control that covers the financial reporting. Yes, if the financial account, so far as it's concerning the financial system, no. But for a private company, you can actually spread it, all right? A department can go and do it, another department will go and audit. Corporate finance, the same thing. You should not, corporate finance is where you the auditor, you sign like an underwriting, all right, for the client, kind of giving him a backup to be able to take the finance loan, all right? You are not supposed to do that because it will create a self-review, all right? So that is that. It is not allowed for you to commit like that, like being a guarantor. No. Let's finish these things up with advocacy. What is advocacy? Advocacy is promoting the client business. So what are the things you see there? Acting as an advocate in litigation, like the one we just said. Communicating publicly about the client. No. Promoting the shares of the client. They are all advocacy threats. All right. Now, the safeguard is that you must appear, when we say be independent in fact and in deed, what does it mean? It means that your state of mind, all right? So here we are talking about professional skepticism, all right? So that is what we are talking about. You must have integrity and be professional. Question something. You understand professional skepticism. And you must not have any affiliation with the company, which we call independence in appearance, all right? So don't be inhibited in your professional skepticism, which means you are appearing independent in fact. So you get facts to, fact, having it in an integrity manner, all right? So that is that. Then do not appear to be affiliated to the client. With no familiarity or anything. All right. So basically, that is that. So you have to be careful about those things. All right. So that is that. Then familiarity, we all know familiarity, long relationship, being there for a long time. I mean, it creates some bond, all right? So close family members and all those things. The audit rotation in the law now says that you can work for an audit client for 6 years, then you go on a fallow period for 6 years, then you come back and audit him for 6 years. This is called audit rotation. All right, so that is that. So you can't work for them, sir. For 6 years, you leave, another 6 years, you come. All right, so 6 years, you leave for 6 years, then another 6 years. So it goes 6, 6, 6, 6, 6, 6, like that. All right, so that is that. Intimidation threat is threat of dismissal, all right? Threat of not giving the client an extra job. I'll come to you, Emmanuel. Threat of not giving a client an extra job, or using the knowledge you have to bamboozle or bully the client, all right? So that is intimidation. You are making the person feel less of himself. All right, so that is that. Now, Emmanuel, yes, you can now come in.
Respect to the 6 years, does it include unlisted companies?
Yes, yes.
Okay.
All right. So that is that.
And then
so
with respect to, was also a clause made with respect to a partner supervising one company, one particular client for, or that one was not made?
No, it's 6 years. You can't be there for 6 years. And even with the 6 years, you should be rotating. If you are always there like that, it creates familiarity, dangerous familiarity.
Yes, sir.
Yeah, peace.
So please, with the Auditor General auditing the public sectors too, should they be rotated and giving it out?
No, that one is public sector. You see, that one is public sector. They are the sole auditors. It's not like there is a KPMG and there is a PwC for the public sector. Public sector, they are one, Auditor General. So there is nothing like rotation. But you see, if the public sector auditor, if this year the Auditor General sent Group A to one place, next year send the same Group A, I think he should change in. All right. If you don't change, what will happen is that they will form familiarity. Okay, they will form familiarity. So you have to change them. Basically, that is what it is. But in Auditor General Department, you don't do rotation like that. It's just that you have to be changing the team members. All right. Is that okay?
Yes, sir, I'm okay.
All right. Now let's talk about confidentiality. Now, in confidentiality, the scenario you will have in your exam is this. You will have, hold on. The
I can't hear you.
I think your voice is no more audible.
Hello, can you hear me now?
We can hear you,
Yes.
but first, when we started drawing, it was not coming.
All right. So if you can hear me now, it's fine. Now, what I'm saying is that confidentiality situation in your exam, all right, is a situation whereby you will have, let's say, Mr. Amma here, all right, who used to work with company A, but now, as we are talking, he is working with company B. But there is a contract that company A has to obtain from that company B has to obtain from company A. And Mr. Amma happened to be in the middle of it. So because he used to work with company A, he has information about company A. Now, you see, in the scenario, you realize that they will try and tell you that because they know he has worked with company A before, that is what they want. That's why they want him to front the work. All right, that's why they want him to front the work, because he knows some things about company A. At that point, are you going to use the information you had when you were working with company A for company B? Are you getting the scenario now?
Yes.
Yeah, so that is how it is. And sometimes, you know, some companies, when we work with them, they will let you sign some confidentiality agreement that when you leave, you cannot use information, but they will not be specific about it. It's general. Be that as it may, the onus of confidentiality is on the individual who is going to practice. So you know that the thing that you are going to use, are you going to use it for your personal interest? All right. Are you going to actually use it for your personal interest? Or because if you use it, you get promotion from your company B. So that is the situation of confidentiality. All right. That is the now when you have those situations, I mean, what will you do? What you can do is that you will seek counsel from regulatory. So you go to the body, accountancy body, all right, to seek counsel. But in every counsel that you seek, do not compromise on confidentiality. All right, so that is that. But we know that confidentiality has a limit. Is that not it? There are instances where you can't, you have to disclose. You just have to disclose. If the person is doing something illegal, money laundering or whatever it is, there are exceptions. You should disclose. All right. So that is that. So that is the general rule. Do not disclose information, the client information, to anybody. However, there are exceptions. If the person is doing money laundering, you have to. All right. And you can also seek permission to actually disclose the thing. If the thing is deemed in public interest, if the people are committing something illegal, you cannot say you will not disclose. Some people say, then I will resign. Resignation does not preclude you from disclosure. So, and resigning from a client does not mean that the auditor is now free, all right, to disclose any information that is. So there are two ways to it. If you are resigning, it doesn't mean you are free to use the information. Or if the thing is illegal and you resign, it doesn't stop you from also disclosing. I hope you have seen those two scenarios. Is that okay? So that is confidentiality for you. Then conflict of interest. Conflict of interest. Please listen to the conflict of interest scenario very well, because it has a thin line between itself and self-review. But this is where we talk about conflict of interest. Conflict of interest is when the audit firm will be the same audit firm auditing Apple. So I'm using Apple and Samsung. What do they have in common? What do Apple and Samsung, what are they? What is the relationship between
They
Apple
are
and Samsung?
telecommunication. They are mobile producers.
What is the relationship? They are competitors. Have you seen that?
Sorry, sir.
Yes.
Yes, sir.
So when an auditor is caught in the middle of auditing competitors, that is where you apply conflict of interest. Please don't go and say that the auditor is having conflict of interest when he is reviewing his own work. Please don't. We apply conflict of interest only when the auditor is in the middle of two competitors. That is it. If they are not competitors, then it is self-review. One client, self-review. Two competitors, we talk about conflict of interest. So what will you do to solve these kind of issues? There are so many things that you can do in terms of conflict of interest. Now, this is what you can do. You can employ separate teams. Team A, go to Apple. Team B, go to Samsung. You can also opt for separate offices. The office in Ghana audits Apple. Office in Nigeria audits Samsung. You can appoint distinct partners to lead each of them. All right. You can also assign a third party to oversee the work. All right. You can actually tell one of them that, please, I am the same person auditing your competitor if you are fine with it. You can create a Chinese wall between your own office. You can even resign from one of them, or you can resign from both of them. But please, if your answer is always about resigning, then you never have money as an auditor. That is it. So please, those are your safeguards. Deploy separate team, use separate offices, build Chinese walls, use different team lead, all right? Employ third party to oversee the boundaries that you have created for yourself, all right? Transparency in communicating to the other one, not to provoke the other, all right? Telling them that you are the same person, resigning from one or resigning from both, all right? So those are your. Then the last one for the night is integrity of it. Now, when we talk about integrity of the client, I of C, integrity of the client, there are two things we talk about. We talk about laws and regulations, and we talk about fraud and error. Laws and regulation is ISA 250, fraud and error is ISA 240. Now, this is the deal. Every client is supposed to abide by the laws and regulations in the industry they operate in. It is not the duty of the auditor to ensure you, the company, you abide by the laws and regulations. Because the auditor comes at the end of the year. So he cannot, it is not his job to actually find out that you are abiding by the laws and regulations. It is not his job, but he must be interested in it. Why? Because number one, if you are going to audit a client, ISA 315 says that understand the entity and the environment within the entity operates. So you have to understand that. By obtaining, when you understand it, then you obtain sufficient evidence that if they are abiding by the regulations, that is it. So you see, this is the thing. If, let's say, an entity is not paying taxes to GRA, which is part of the laws of the land, what do you think will happen? GRA will fine them. Is that not it? And fine payment will bring about IAS 37. You need to provide for fines. If GRA closes, those of you I'm doing the advanced tax with, you remember I taught you that GRA can actually close your firm because you remember section 51 of Act 915. An amount owed to GRA is a debt to them, and they must use all means to collect the money. So we talked about the fact that they can seize your landed property. Yes, when they do it, it was going to affect your going concern. Going concern. And what is the accounting standard for going concern? Who knows the accounting standard for going concern? I can say that is IAS 1, going concern. So presentation of financial statement. That's where it talks about that. See, you are doing audit, so the standard must be at your fingertips. That is why I'm telling you that if you are not doing corporate reporting, advise yourself. It's not late. Some centers have not even started. It's not late. All right. This IAS 37 too, the same thing. All right. So now it is the company who is supposed to ensure that they abide by the laws and regulations. Now, the auditor, number one, needs to understand, according to ISA 315, he has to obtain general understanding of the entity he's going to work for, the laws that surround it, obtain evidence that they actually comply. Because if they don't, it can affect the going concern. All right. Now, after that, where he realizes that this is it, where breaches are found. In fact, where breaches are found, he's supposed to report it to management. If management are part of the breach, then he must report it to the highest level of authority, which is the board, the audit committee part of the board. If they are all part, then it means he must report it to the shareholders, or he can also report it to the regulatory authorities. So reporting is very important. Understand the entity and its environment, obtain evidence that they comply, do your assessment, how their non-compliance affect the figures in the balance sheet. All right, then document it, report it. So these are the 5 things. Understand the entity and its environment, obtain evidence that they comply. Then what do? Perform audit assessment to see its effect on the figures in the financial statement, document it and report it. Report it. In reporting, first report to management. If management is involved in the non-compliance, to the audit committee of the board, then to the shareholders, and beyond that, report it to the regulatory authority. That is ISA 250. Ladies and gentlemen, the same thing goes for ISA 240. It is not the duty of the auditor to ensure there is no fraud in your office. He doesn't stay with you in the office. That is why you have employed an internal auditor. All right. It is not the duty, but he must be interested, because if they are stealing money, it affects the cash balance. If they are misusing assets, it affects the usage of the assets. And so therefore, the auditor should be interested. All right. So when the auditor comes in, the concept of professional skepticism must be applied so that he can question everything. He must also plan his work to identify those risky areas where he thinks that fraud will happen. Then the last one is for him to report. Now, these are the issues. Number 1, apply professional skepticism to find out the risky areas. Number 2, report the fraud. The reporting of the fraud is the same as reporting the laws and regulations. So to management, directors, and shareholders, all right? Then risk assessment, assess it. How does the fraud affect the financial statement? All right, because you will need to collect written representation from, we will learn that more on written representation. You need to get it from the management. Before an audit starts, the management gives the auditor a letter stating that, oh, here we don't commit fraud and error. We have chartered accountants, everything is fine. We call that report a written representation. Now, if there is therefore a fraud, then it means it defeats the written representation. So the auditor must do a risk assessment for that area, assess that, and find out how that fraud affects the figures in the financial statement. So, ladies and gentlemen, that is that. So this is where we end the session for this one. And at this point, before we go, if there is any question, this is the time that you can ask questions that concern what we have learned so far. All right. Any question? Any question?
So please, it's about a book. And I get your book. Is there a need to get the ICA book as well?
That one is your own opinion. I mean, it's a book, so you can buy as much as you want, okay? But if you want
in your opinion,
if you want my personal opinion, add the ICA book money to my own and dash it to me. God will bless you.
Okay, thank you.
Yeah, so you can get the book. Well, you don't need to buy the ICA book, really, but I mean, it is good. Me, I am buying the ICA book for my room decoration, that my children will know that I'm a CA. So you should have a record of a CA manual in your house. Is that okay? What was it?
Okay, thank you. So how do we get it? I asked the first question, that the thing was breaking, so I couldn't hear you.
You just DM me, all right? I'll be on the
Okay.
page, so just pick my number, DM me. You do the Momo, we will send you to Akosombo. We will do delivery to you. That one is not.
All right, thank you.
All right. Okay, so if there is no more question, get ready for my first assignment, because I'll send it to you on your pages, and you have 1 week. I mean, You have 1 week, because the next time we are meeting is somewhere 22nd per your timetable that I shared. I think for PTS, I've not shared timetable. I'll share it. I'll share it with you right now. Thank you.
But I learned that